Hello friends, welcome back to your favorite channel, Tradebasics. Today I've come up with a strategy which I've been using it for some time and really gives you a good amount of uh, opportunities and good opportunity which you can ideally try and make some money out of it. Okay. So this is based on a simple strategy, which is your pivot points, floor pivots. So basically, you are adding pivot points here, and then go to the settings and change the type to floor. Okay. So basically, and all other settings you keep it as it is. Okay. There is no need of changing any other settings, and you just say OK. So you will get these floor pivots which are plotted on your chart. Okay. Then you are adding another important thing which you are adding is open interest. Okay. So open interest, one indicator is there which you will get it. You just have to search it for the open interest. Okay, and you will get this indicator here. Okay. Strategy is very simple. Okay, this is based on a price action, nothing much we are doing. Uh, on any other indicator. So basically, we are just looking at the price action and the open interest on the options, right? So today's market, if you really observe, market the Nifty call, it's a 700 call, opened exactly at R1. Okay, so anything which is opening, so I'm using 3 minute chart right now. So it is exactly opened at R1. Okay, so we have a strong entry in case if somebody is a opening trader and quickly you want to do some trades. So this is a very good thing which is opening at R1. R1 is basically very positive. Okay, so it will open at R1. You just have to keep the SL at the base open. Okay, or the first candle low, and your risk reward will be 1:1. Okay, here. So basically R2 will be a target. So exactly it has touched the R2. After that it is trying to fall. Okay, but if you look at open interest is flat here. Okay, so basically opening you have got one trade. Okay, after that basically if you look at the open interest thing which was continuously falling. Okay, and then what is happening if you look at certain other things which is at the R2. So basically you have to always remember R2 is something which is very over bought kind of scenario. Okay, so mostly the reversals will happen on the options, will happen generally on R2. Okay, so now today exactly at the R2 it has gone and it has reversed exactly from that point. Okay, so it was not able to cross the R2, and now the below it has gone exactly. So the next time it has come to the P1, sorry, R1. So R1 it has straight away broken, right? So there is no support here. So we are not going to take any trade here, right? So basically there was a long built up happening which was slowly falling, and then it has kind of completely gone down, right? So basically here there was some transaction which has happened where the exit was given. Okay, so exactly it has come to the pivot point which is P. Okay, here it is one green signal it has given. So basically one green candle at this point. Okay, so if you keep this candle low as your SL, and if you take an entry, so basically 122 was your entry and 110 was your stop loss. So 12 points the stop loss. Okay, and here how much you have got? Almost 20 points, almost 23 points, or 23 24 points, right? So basically 1:2 one, you have got it even here as well, right? This one is also supported by the open interest. So open interest, when you are looking at, now look at the put trade which was continuously going down. So basically it has opened at S2 S1 only, and then it has gone to the S2. S2 generally I told you it is a oversold situation. Here it was overbought, here it was oversold. So ideally one bounce has to supposed to come. Okay, so one bounce they attempted here. Okay, if you look at this particular place, ideally your entry was around 99. Okay, and your target ideally would have been 138, However, if you look at it, 99, when you have taken the entry, the stop loss was hardly 2 to 3 points just below that particular place, right? So, if you look at that, 1 is to 7 kind of you have got the ratio. But yes, in case if you would have hold it, you have to take the SL around these areas, okay, because the open interest was also continuously increasing. So basically here the option, the put writing was continuously going on, right? Then if you look at the first signal, okay, now it has attempted multiple times. Now what I do generally here at these particular places, I will try to find out what kind of price action is forming, right? So we basically one, it was continuously falling, right? There was no pullback here. So this one was the first pullback. After that, the pullback, the price has gone down. Then there is another swing which is built up, right? So here at this particular swing, whenever this is breaking this particular swing, right, I'll keep my SL just below this particular point and I will take the entry. Okay, so here the entry was around 98 rupees and your SL was 90 rupees and you actually got 156. So which is almost like 50 points movement. Ideally, I would have booked my trade around this S1 area. Okay, so if at all anything is happening after that, is completely at the discretion of your thing. But if you look at this one also will give you a clear picture on the open interest front, what is happening on the open interest. So basically put writing which was happening, which was cleared. So basically whenever you're getting these kind of momentums, when the open interest is falling and the price is increasing, this is short covering and this one can give you really quick and fast move. Okay, so whenever this is happening, you can always try for a quick scalp which is at least 20-30 points. You can quickly get it on these options. Okay, so this is basically on the strategy only, and you can go back and check on any other days also how exactly it takes the support. For scalping it works superbly, and for other things also you just have to combine it with the open interest. It will give you much more better results. So even here you look at it, this one has kind of fallen. It here it was at the S1 only, it was taking the support. Okay, so double bottom is formed. You can take always at this entry. You have decided stop loss at this point, so you can always take the stop loss in case if the price is going against you. And generally pivot point is something which where the price will generally consolidate and then revert. So basically what happens is price will generally move between these two zones, which is your the S1 and pivot, or R1 and pivot. Okay, so these are the two places generally the price will kind of consolidate on the options front. Okay, your spot price might go anywhere, and certain times when it is see, most of the cases we are looking at it, R1 it has opened, R1 it has taken the support, then it has gone to R2. R2 it has started consolidating back to the back to this level, so it has not crossed R2 again, right? So there are certain cases like here it is crossed the R2, it is even crossed R3 also. But these are dangerous zones where you have to be very careful and look at the open interest and then accordingly make those trades, right? So you would clearly see there was a long build up happening from the morning. There was no drop, and then here some short covering also has happened on this strike, and that is where it has gone up. Okay, so basically if you look at these places, you can always take in a green simple calculations you have to keep it as basically whenever it is trying to take the support, that place you have to take the entry maybe 5 to 10 points stop loss just 5 points below this pivot point, so that your stop loss is not unnecessarily hit, and according to that you can take the trade. So this is a very simple strategy. You test it and let me know the feedback. If any if you think it is working for you, just let me know. Thank you guys, and our telegram group channel link is there in our description. Thank you guys.